Welcome back to The Explainer. Okay, today we are looking at, honestly, one of the most phenomenal corporate transformations in recent memory. I mean, over the last 18 months or so, leading right up to May 2026, AMD has completely morphed. They went from being this sort of scrappy secondary player in the semiconductor space to becoming the central strategic heartbeat of global AI infrastructure. We're talking about a seismic shift in the tech landscape here. So let's dive right in and break down exactly how they pulled this off and, what it means going forward.
Plus 339.8%. Yeah, let that sink in for a second. That is AMD's absolutely staggering year-over-year stock return leading into late May 2026, which effectively blasted its market cap way past the $820 billion mark. The momentum has just been vertical. And it's all driven by this massive market belief that AMD is the only truly viable alternative to power the next wave of artificial intelligence. It's an incredible growth story, but it's stretching the positive tension of this business to its absolute breaking point.
But we really need to snap that narrative rubber band right back to reality. Look, on one hand, their execution has been nothing short of flawless. Q1 2026 data center revenue up a massive 57% year over year. That is a blowout quarter, no question. But on the flip side, and this is a big but, their trailing price-to-earnings ratio is sitting at a sky-high 166.6x. So what does that actually mean for you? It means the market has priced AMD for absolute flawless perfection. There is this intense, almost terrifying tug-of-war happening right now between a genuinely solid structural thesis and a valuation that leaves literally zero room for error.
So, here is our roadmap for the Explainer today. First, we'll look at the underdog to AI giant transition. 2, those massive hyperscaler deals. 3, being priced for perfection. 4, the critical risks. And finally, number 5, the ultimate 2026 test. Let's get into it.
Starting with Section 1, Underdog to AI Giant, Crossing the Threshold. Just 5 years ago, AMD was definitely a relevant but firmly secondary player in CPUs and barely making a dent in GPUs. Today, they are crossing a massive threshold.
Because for the very first time in the entire history of the company, their data center segment just crossed the 50% mark. In Q1 2026, it hit $5.8 billion, making up 56% of their total revenue pie. Meanwhile, client and gaming is sitting at 35%, and embedded is down at 9%. Guys, this is a historic structural milestone. AMD is just no longer a PC and gaming chip company. Actually, scratch that. They haven't been for a while, but the numbers finally prove it. They are fundamentally a data center and AI infrastructure powerhouse.
Now, a huge part of this rock-solid foundation actually comes from their server CPU business. Their EPYC line has been quietly, steadily eating away at Intel's market share for years now. By Q1 2026, their 5th-generation Turin architecture crossed 50% of their own server mix. And why does this matter? Well, this consistent share gain acts like an anchor. It provides a highly reliable, predictable revenue stream that essentially bankrolls their much more aggressive, wilder AI ambitions.
All right, moving to Section 2, Massive Hyperscaler AI Deals, Securing the Future. Because while the CPU story is a great bedrock, to really grasp this explosive growth, we have to look at the hyperscaler partnerships that are literally rewriting AMD's economic DNA.
For example, why did CEO Dr. Lisa Su recently just casually double the server CPU total addressable market forecast, going from $60 billion to over $120 billion by 2030? Well, it boils down to one phrase: agentic AI. See, historically, if you were doing AI training, you needed maybe one CPU for every 4 to 8 GPUs. But agentic AI requires these AI agents to spawn all these multiple background tasks for orchestration and data processing. So suddenly, we're seeing this historic CPU to GPU ratio shift way closer to 1-to-1.
And speaking of GPUs, the sheer scale we are dealing with here is honestly hard to comprehend. 12 gigawatts. That is the combined compute commitment AMD has locked down from its 2 biggest recent deals. To put that into perspective for you, 12 gigawatts is literally equivalent to the entire electrical consumption of some small countries. We're talking about roughly 6 million MI450 GPUs being deployed over the next decade.
So, who exactly is buying enough compute power to light up a nation? Well, we have 2 truly transformational deals that give AMD just unprecedented multi-year revenue visibility. First up, Meta. They send a 5-year deal valued between $60 and $100 billion. They're grabbing custom-engineered MI450 GPUs, Helios racks, and they're the lead customer for those new 6th-gen Venice CPUs. Then you've got OpenAI. They've committed to a multi-generation deployment of 6 gigawatts of Instinct GPUs, kicking off with an initial 1 gigawatt deployment in the back half of 2026. The takeaway here? These massive hyperscalers absolutely do not want to be reliant on a single supplier for their most critical infrastructure, and AMD has brilliantly positioned itself as the definitive alternative.
Which brings us nicely to Section 3, Priced for Absolute Perfection, the Valuation Reality. Because all this phenomenal news brings up the core tension of our explainer today. There is a massive, glaring gap between AMD's fantastic business execution and the completely saturated hype narrative surrounding the stock.
I mean, just listen to these numbers. At an enterprise value to EBITDA of 109.4x and a forward PE of 62.9x, AMD's multiples are sitting comfortably in the top 1% globally. In fact, independent fair value estimates suggest we might actually be looking at a near 30% downside from their recent all-time highs. Plus, their 5-year beta is 2.40. That means this stock is more than twice as volatile as the broader market. The market is demanding absolute perfection here. Even the tiniest hiccup in execution could trigger a brutal multiple compression.
And there's another layer to these massive deals that kind of flies under the radar but definitely requires your attention. To actually secure these mega deals with Meta and OpenAI, AMD had to issue up to 320 million customer warrants. In plain English, AMD is essentially handing over up to 17% of its total equity to its biggest customers, contingent on hitting certain deployment milestones and stock price hurdles. So yes, these deals guarantee tens of billions in revenue, which is amazing, but it also means a massive chunk of AMD's future upside is being siphoned directly to Meta and OpenAI, diluting the standard shareholder in the process.
So let's talk about Section 4, Critical Risks to Execution. Threats to the narrative. Because, like we said, when perfection is already completely baked into the price, we absolutely must look objectively at the specific threats that could derail this incredibly steep trajectory.
We're looking at structural and operational risks coming from all directions here. First off, AMD is fabless. They rely 100% on TSMC for their advanced chips, meaning TSMC's operations in Taiwan are a glaring single point of failure. And TSMC's 3nm capacity, it's expected to remain incredibly tight throughout all of 2026, which could easily cause a supply bottleneck. Then, obviously, there's the 800-pound gorilla in the room. NVIDIA still holds a whopping 84% market share in AI accelerators. On top of that, you've got US export controls severely restricting access to the Chinese market, which, by the way, used to make up a quarter of AMD's revenue. And finally, memory inflation hitting in the second half of 2026 is almost certainly going to squeeze margins in their legacy client and gaming segments. But honestly, the single biggest competitive risk here, it's the software. While AMD's hardware is incredibly competitive, especially when it comes to AI inference, their ROCm software stack is, well, it's still playing catch-up. NVIDIA's CUDA ecosystem has a 15-year head start. It has millions of developers and deep native integration across the board. Now, to be fair, Meta and OpenAI are actively stepping in to help build and optimize AMD's ROCm software, which is a massive boost for inference workloads. But when it comes to training the absolute most advanced frontier foundation models, NVIDIA's CUDA is still the undisputed, deeply entrenched king.
Finally, Section 5, the ultimate 2026 test, the synthesis. The immediate future is going to force a reckoning between AMD's incredibly strong structural thesis and its highly perilous timeline.
Let's map this out into a real, actionable roadmap for the rest of 2026. So, what should we be watching? Well, in August, the Q2 results are going to verify if their data center growth can actually sustain this massive stock rally. But the real crux of this whole story is the second half of the year, that initial 1 gigawatt MI550 deployment with OpenAI and the Venice EPX launch with Meta. They absolutely must happen on schedule. Any delay, and I mean even a single quarter slipping in the MI550 volume production, is a massive flashing red flag that will completely shatter that price for perfection narrative. Literally everything hinges on flawless execution as we close out 2026.
So let's wrap this up. AMD has successfully navigated arguably the most difficult transition in tech history. They've landed the unprecedented multi-billion-dollar mega deals. They have a mind-bending 12-gigawatt pipeline to power the very future of global AI infrastructure. They are clearly no longer the underdog. But when you are trading at a 166x trailing PE ratio, and your biggest customers essentially own 17% of your equity upside, has all of that future success already been entirely priced in? It is a fascinating, high-stakes balance of incredible technology and terrifyingly high expectations. Think about it. Thanks so much for joining me on this explainer, and I will see you next time.